additional set of review or audit for before it to be able to reporting on pro forma set of financial information. Like I mentioned earlier, all the pro forma adjustments which are proposed to be made, those should be factual and those should be directly attributable to the transactions. That is what the primary requirement while reporting on or while the clients prepare such financial statement. Modified report, audit opinion, one need to also take cognizance of the underlying reports. In my earlier example, suppose entity A, when the auditors of entity A, there is a report which has been issued. If there is a modification for underlying report, one need to see how that is going to impact the pro forma financial information. Is there a requirement to deal or put through appropriate adjustment to be able to deal with that particular modified opinion? Now, in some jurisdiction, what happens in when the pro forma financial information are prepared to be meant for included in a prospectus, when reporting on pro forma set of information, finally there should not be any modification in the report. So the client and the practitioner, they should discuss with each other how should be addressed, how should be dealt. If suppose the client in a situation they are not able to put through or deal with that modification, then the practitioner should consider resigning for those engagement, assuming those modifications are not acceptable for the purpose of reporting on such financial statement by the regulators for the purpose of inclusion of a document or prospectus. Now, in a scenario, for example, where the regulators they do not mandate or there is no prohibition as such for having a modification in a pro forma information, then the practitioner may consider inclusion or keeping those modifications in the report which is meant for reporting on pro forma financial information. If practitioner finds that sources are not appropriate or the information from where the unadjusted financial information have been taken before putting any pro forma adjustment, practitioner should perform additional procedure, find out what is the reason why those information are not flowing appropriately, and ensure that those information are being taken from an audited or reviewed financial underlying information. While reporting on pro forma financial information, the practitioner are also required to determine the mathematical accuracy for all those pro forma adjustments which are being put to unadjusted historical financial information. So when it starts with the historical financial information, unadjusted financial information, all those pro forma adjustments which are being made, and then finally when the client prepares a pro forma set of financial information, mathematically, so we have an obligation to also see whether those are mathematically accurate or not. Now, pro forma, I forgot to tell you, pro forma financial information could be of various nature. There could be a requirement only to prepare pro forma financial information like profit and loss statement itself, which may be considered by investor or a reader to evaluate or assess how the performance will look like when the entity, in my example, A and B are combined together. There could be a situation where there would be a requirement to prepare pro forma financial information for balance sheet, profit and loss, and cash flow. Depending upon the underlying requirement, the set of pro forma financial information requirement would also be different. What are the considerations for practitioners while reporting or evaluate on presentation of pro forma financial information? Look at what will be the overall presentation and structure of pro forma financial information. Pro forma financial information are clearly distinguished from historical financial information or unadjusted financial information. Pro forma financial information are appropriately labeled, stating that these are pro forma financial information, so the readers they can clearly make out those information have been or are to be perceived as pro forma basis and not on actual basis. In some cases, what may happen if even though there is no requirement to update, there is the underlying reporting which would have happened for the underlying historical financial information, sometime it may make necessary for the practitioner to look at the subsequent event and whether those events lead to any explanatory disclosure in the pro forma financial information, so that those are uh, not taken inappropriately by the reader. For example, if suppose there is a convertible preference share which has been converted subsequent to year end, and when one reader looks at those financial information after subsequent year, there should be appropriate disclosure for the reader or investor to be able to appreciate those subsequent event information while reading or along with having pro forma financial information. There in some cases and what happens that when pro forma financial information are included in prospectus, there will be various sections which we typically call as or known as other financial information in prospectus. The company or the entity would have used this pro forma information on various areas. Practitioners should go through those items as well and ensure that there are no contradictory information sitting in these areas, and there are no information which may impact or have potential impact on those pro forma financial information on which the practitioner is supposed to opine on or issue an opinion. Finally, while opining, like I earlier touched upon, first, and if there are any adjustments which are not in line with the requirement of pro forma financial information, one would need to evaluate whether those modifications can stay and those are acceptable by the regulatory authorities. Then they should consider inclusion of those modifications. In case those modification cannot be there in or should not be there in the report and it cannot be accepted by the regulators, then the practitioner should initially discuss with the client. They should consider withdrawing the engagement, and in some cases they may require to consider legal help or legal advice in those situations. What should be the appropriate steps for the practitioner to be taken? On the report part, like you see any other report in when we opine on, there will be a title to reflect what are the report on like reporting on pro forma financial information or reporting on pro forma revenue. To have an appropriate title, addressee could be shareholders, addressee could be board of directors, whoever has engaged us or the practitioner for reporting on pro forma financial information. Then there would be introductory paragraph in the report just to identify what is the underlying information, historical financial information which has been used to make pro forma adjustment, what are the pro forma adjustment, providing appropriate references to the notes to accounts of financial statement, what are the period cover, what are the pro forma financial information, and to give a proper background in the introductory paragraph. Then it comes to responsibility paragraph of the preparer. What are the responsibility of the preparer to explicitly bring out the fact the preparation is not the responsibility of the practitioner, it is the responsibility of management. They are required to have adequate control process, any judgment which they are required to take into consideration while performing or preparing this pro forma financial statement. Those should clearly come out in the client's responsibility paragraph. Next would be practitioner responsibility paragraph, wherein we provide what are our responsibility, also to make a statement the way it has been explained in the example given in SAE 3420 standard. The pro forma financial statements are not actual from financial information, and it does not reflect the real performance or financial position of a particular situation. And also to highlight a fact even though this pro forma financial information have been presented for a historical period, there is no assurance to actual outcome of the event, or there is no assurance the way it has been prepared for past period, the similar way their performance would be for future. That's an explicit, I would say, disclaimer which should be included, which is appropriate as well, because we cannot comment on how this company, once they are combined, what would be the performance look like. Also, a statement to make a reference of SAE 3420, saying that all those procedure which has been performed by the practitioner are as per 3420 standard, and we have met the requirement as required under SAE 3420. Purpose of the engagement, purpose of why the pro forma financial information has been prepared, what are the procedures which we have performed on that, and then finally we are required to include and practitioner's opinion, wherein we will state a fact that pro forma financial information have been compiled based on the assumptions made for pro forma adjustments. Then the way you see in a regular, I would say, report, a practitioner signature, date of report, place of signature. One thing I want to remind, currently UDIN is also applicable for assurance engagement. Please ensure that UDIN also is being made applicable for such reporting and being reflected, used while reporting on pro forma financial information. This is what I had got a small brief summary about reporting on pro forma financial information. Thank you very much. All the best.